All right. All right. Well, here we are. It's another Sunday night. Thanks for watching this whenever you do, whether it happens to be live or later on. I really appreciate the love I've been getting on these. Hitting episode 7 here, so it's 7 weeks in a row. Have gotten pretty good feedback, so I figured I'll just keep going with it. Today, there's actually a couple topics. I'm going to try to move through them relatively quickly, but what I want to start with is, as always, is this is really about sort of delivering my thoughts on the news, not about financial advice. I know we all say that all the time, but I think it's really important to double down on that message that, you know, when you're getting news, when you're getting thoughts, it's important to do your own work, your own due diligence, and make sure that you know where your information is coming from and what you're looking at. So, as always, I am not trying to be your financial advisor here. I don't know your financial situation, and you should always do your own research and work with those who do and who are licensed. And also, I'm again another week getting really close to hitting 700 subs, so I am really pumped about that. And thank you everyone for joining with us here. I can't say enough how much it's appreciated. And if you're not subscribed or haven't subscribed yet, we'd love for you to do so and hit that like button. Also, it really helps us out. I think that's where a lot of this is getting driven from. Is we're getting really great comments, starting to see a lot of action coming from the likes. So thanks so much for doing that. Without further ado, let's jump on in. I think there's a lot more to talk about this week than there have been in past weeks. So I almost sort of struggle with where to even begin. So I'm just going to jump right on in. First and foremost, if you haven't heard it yet, there is an imminent and major talks between AT&T, who's talking about merging Warner Media with Discovery. This could happen soon, like soon as in tomorrow soon. So it's unclear what this necessarily will mean. I think that it means a lot, though. We're starting to see more and more of this sort of back to conglomerate view, back to big view. As I think back to the days of too big to fail, and we want to refocus on making smaller companies and less about huge. Just the tech space in general, the media space in general, this is really where like big is going to keep working. So as you look at your portfolio and you think about, who could be acquired or who can be, merged with, I think these are good things to be aware of. I will tell you with AT&T in particular, I am a fan of their stock because they have such a great dividend rate. But this one in particular is a big deal. I think it says something for the market that we're in. We don't know exactly how this merger is going to pan out as far as who has control and who doesn't, what that price is going to look like. There's not a ton of information out there just yet. I think what we do know offhand is that Discovery has somewhere around a $16 billion market cap, and this thing has a $30 billion enterprise value. We also know that AT&T had originally acquired Time Warner, and obviously then changes to Warner Media later on. I think if you haven't seen that, that is what's happened. That was done for about $85 billion in equity, and this is going back a few years to 2018. So we don't have much more information yet, except to say that looks like it's fairly imminent and could happen really at any time. So a couple of the things that are top of mind here, and I think it's a big deal to talk about, is even if you're not in the crypto space is a huge space. It affects a lot of things, and there's two topics I want to talk on this tonight. I want to talk about what's currently going on with the pricing there. And I also want to talk about Elon Musk a little bit as well. Certainly this isn't an effort to get clout because nobody cares, but I just thought it was worth calling out the way that I think about hedging and risk on a lot of these videos. This is why I think about it, and I'll pull into that in a second. First things first, I'm actually going to take a look at pricing on my phone here. As I was getting ready for this, I happened to check the current prices of some of the top crypto markets out there. And just at the time of recording, it's 5:54 p.m. on the East Coast in the U.S. Right now, as I'm looking at prices, Bitcoin is down, and this is in the past 24 hours, 6.5%. Ethereum's down 8.6%. Binance down 5.7%. Cardano down about 4.5%. Doge down about 6.1%. XRP down about 8.5%. You get it, right? Things are kind of trending downwards here quite a bit. Bitcoin, as an example, is down at around the 45K mark. Ethereum is down at around 3,500. So, what I hate to use words like crash. I hate to use words like, it's going away. We're in big trouble. The crypto markets are gone forever. I don't think that's what's happening here. But what I think is really interesting is that there is this massive discord going on across Twitter, across the media, across, frankly, celebrities. And that's the part I want to drill into a little bit tonight, is when we think about how we build our portfolios, how we plan for risk, how we look at hedging, and we talk about this every week, frankly, on this channel. I think what's really shook me in the past couple of years here, and why I talk about this so much more often than other folks, is it used to be that you could look at a balance sheet. Good evening, sir. Good to see you here. Thanks for jumping on. I think in years past, when we used to look at balance sheets, understand fundamentals, we do some technical analysis to understand stock prices, movements, breakouts, and the like. It was always nice to have some degree of confidence that you could at least predict with some degree of understanding what was likely to happen. You could build a range around what was likely to happen. You can have probabilities built into that. So, representing almost like that bell curve approach to where numbers are likely to be. I think what's really changed in the world of investing in risk is the celebrity voices that impact everything that goes on. So the reason why I said I wanted to talk a little bit about crypto here and what's happening with this correction we're seeing, but really about Elon and the likes. Right before I started to go on this video tonight, I was reading about the conversations happening literally on Twitter between Cardano and Mark Cuban. And you've got Elon posting stuff all the time that's sending the markets in wild directions. Like 1 minute it's we're putting Bitcoin in the balance sheet, we're accepting Bitcoin. The next minute is Bitcoin's not good for the environment, we're done with it, but we just made a ton of profit on it. Now what I'm hearing is they may even be taking it off their balance sheet. Don't know if that's true or not. That's just what I'm hearing through the ecosystem that I'm a part of. And then at the same time, we see Jack Dorsey coming out to defend it. We see Cuban looking for the next big player and trying to figure out what that looks like and how to get them integrated in his organization. So look, this isn't about crypto. That's not the main focus of this channel in general. I know it's a really popular topic and folks like to talk about it. I talk about investing holistically and understanding the risk from a 360-degree perspective. What is really tough to talk about, and I think that this is actually something I sort of am wondering when the SEC may get involved or if they even do, but also what enforcement would even look like, is how do we take into account these massively important tweets? And I feel silly even saying that, frankly, but it's just such a big part of the world we're in, where someone can simply put something out, tweet it to a few million people, and with no ability to understand what it really means, the depth of it, where that's coming from, what it's going to mean from a company perspective or a global economic perspective or whatever, wild things are happening, right? Whether it's Doge going up through the roof because of a comment, or Bitcoin crashing because of another comment, or people trying to pile money to the next big thing. I think that one thing we're going to see, and I'm going to reiterate this, is you're going to have to start seeing and understanding what kind of responsibilities publicly traded companies owners are going to have in what they say and what they put out to the market. Because, if you're an investor in Tesla, for example, and you're investing in it because you like the strategy of the company, you like the direction it's going, you believe in the vision of the cars, and you also like what Elon is doing, I think people are going to start to get frustrated when the pricing of the company is always directly tied to his ability to generate concern, risk, or excitement around a tweet. And, I think that's the world of the CEO celebrity nowadays. Same goes for Cuban and many other folks out there as well. So when I think about this conversation I have all the time around hedging and understanding downside risk and perpetuating that through your portfolio and how you think about it, I think it is super, super, super important to not just know what those risks are, build in stop losses in your portfolio, leverage puts where you can if you are into that space at all. What I also think you should be doing is go back and look what happens when these big names, these celebrity investors or CEOs tweet. What happens? Is it up? Is it down? Does it end up coming back? Are they knee-jerk reactions? This is, again, something I harp on all the time on this channel, is this idea of what does it mean, right? Like, just because someone comes out and says something, the market moves wildly, but then in 2 weeks, is it back to where it was? In a week, is it back to where it was? Does it permanently stay down because of that? That's research that we have to do now. That wasn't research that was done 20 years ago. We talk about understanding retracements and understanding, values based on fundamental analysis or what kind of charts we're seeing. And those charts and fundamentals go completely out the window over a couple of hundred letters in a tweet. And your entire investment strategy can completely be wiped out in a moment's notice. So again, I'm not harping on the fact that I think people shouldn't take chances. I certainly do myself, and I want to make sure I'm putting my best foot forward. I'm understanding what the likelihood of risk is, et cetera, et cetera. But what I'm saying is you have to go back and look at what actually happens. Look at it over the day, over 24, 48, 72 hours, whatever it might be. But then also start to extend that out and understand, do these things really provide an opportunity to get in at a low price? Is it indicative of a bigger problem or something you couldn't have predicted? And at the same time, is it an opportunity to cut some losses, wait for it to go down more and buy in again? That's your call to make, frankly. But I just think it's really important to understand that we are not living in the same world that we once were. So just taking merely Bitcoin as an example here, and I don't want this to be the focus of this call, listen to me, of this video, but Musk puts out one thing about Bitcoin, price goes crashing. Scaramucci comes out and says, no, totally wrong. It's a great place to be. You're seeing Cathie Woods talk about how he's wrong on the energy piece. We're hearing things about 75% of all miners are trying to leverage more and more of this technology to get green on the way they mine. And what happens is we are just greeted by so much fake news that makes it so hard to predict what's likely to happen, how it's going to happen, what we should be doing about it. I think what we're really doing, and it's kind of scary to say this, is we're basically scaring away a lot of, young, new, first-time, relatively new investors, because how could you possibly plan a portfolio, plan retirement, plan the future around random tweets that can blow up your portfolio in a moment's notice? So again, the way you stop that, really simple: know your limits, know when you want to take a loss on something, and wait to get back in on it. If you're not properly hedging for a celebrity tweet, which is very hard to predict, you never know what it can do to your portfolio. So just be aware if what you're holding today could be impacted by that. And if it could, what happens when they do things like that? I'll give one more example to be really succinct about this point. If you hold Tesla in your portfolio and Musk sends out a tweet, what usually happens to the stock after that? Good or bad? I don't care. Just take a look at it. The next piece of this today I want to talk about as well is on last Sunday, I was talking about the Colonial Pipeline shutting down, the impact this was potentially going to have on the East Coast, getting gasoline to stations, jet fuel, home heating, et cetera, et cetera. And unfortunately, we did see a lot of that come true this week. Gas stations had no gas, some of them for several days at a time. What we are hearing is that Colonial is back up and running. So I'm going to be keeping an eye on oil futures, understanding what pipelines are moving, what the pricing is right now. What I also think is really interesting to look at, once again, I'm always here sticking with this idea of how we hedge our downside and understand risk, is I'm hearing that they paid somewhere between $4 and $5 million in ransom, basically to get the pipelines back online or get the ransomware off their computers. This is particularly interesting because I think what it does is it's really reopening this conversation around how do we create insurance for cybersecurity risk, especially this specific type, because clearly with the absolute massive amount of cybersecurity companies that exist today, it's not getting it done. I just can put on TV for 20 minutes and see 5 different types of companies advertising all the great things they do, and then these huge companies are still having the same problems. So anyways, my point at the end of the day is, we've got all kinds of stuff going on. We're still facing COVID. India still has serious problems. We're aware of what's happening in the Gaza Strip today. And this is not about politics, but just general geopolitical issues, health issues globally, how different impacts and events can happen and how it affects our portfolio. So I think that's where I'm going to wrap it up today, is just really double down on this idea that we are no longer in a position where we can very easily and very quickly understand the risk of our portfolio the way we once did. In order to be really good at this, in order to really protect yourself, in order to really protect your portfolio, your retirement, your income, whatever it might be, you have to go in and you have to do the research. And the research means you have to understand what happens when these events go down to the stocks that are in your portfolio, to the overall indexes of the market, and to the direction of where things are today. It's really that simple. It doesn't mean hours and hours of work. Sometimes it can be just a quick Google search to say, hey, last time Bitcoin corrected, what happened in the stock market? Last time we saw Tesla take a fall, what happened? Last time there was geopolitical issues in the Middle East, what happened? Last time a pipeline was closed down for a few days, what did it do to gas prices? These are really, really simple questions that can protect you in big, big ways in your portfolio. So with that, I wish everyone a good week. I've been getting buried work-wise lately, so I've only been getting one video a week. But the subscriber count's really gone up again, so I really, really appreciate that. That's huge and really means a lot. So what I want to say is this: I'm pretty deep across the full spectrum of the marketplace, especially in a lot of different asset classes as well. If there's ever topics or areas that I'm not covering that would be particularly interesting, something you'd like to get a different perspective on, feel free to let me know. I think what probably makes this channel a little bit than a lot of other channels is I've been in the markets for over 20 years, long-term investor across varied asset classes and alternative assets. I have a lot of perspective on the way that I approach things. I approach things with a risk-first mentality while still looking for opportunistic ways to get into the markets. So if you're watching this long in the video, and I really hope you are, what I would encourage you is if you're not seeing what you want, or there's a topic you're not sure about, it could be things from dark pool investing to tertiary markets to how we buy on OTCs and what that looks like. Let me know. Final point, and I'll let you go. One thing I want you to remember is crypto markets are open 24/7. Forex markets are open a lot more than the equity markets, right? They close late on Fridays, they open on Sunday nights. Stocks that are attached to either crypto and or a currency exchange can have big gaps up or down when Monday mornings open, especially with what's going on in the crypto space right now. So please know that going in, be careful. Make sure you know if there's going to be a gap up or down and what that can do if you do have some sort of a limit or a stopgap in place. And with that, have a great week. Really appreciate everyone watching and sharing the love. So good luck out there. Hope you have a good one. Thanks so much.